All right, so we're diving into some financial headlines today from December 3rd, 2024, all tailored to, well, your newsfeed. It's kind of a fascinating snapshot in time, you know? And I have a feeling, well, I think there's more to these stories than meets the eye, so to speak.
Yeah, definitely.
Yeah.
It seems like we've got a bit of a financial puzzle on our hands today. The markets seem, well, they're feeling optimistic. But at the same time, there are these signs of economic trouble brewing. So the real question is this market optimism justified? Or are we maybe on the verge of a rude awakening?
Yeah, that's what I'm hoping we can uncover today. So to start, we've got the S&P 500. It's having its best month this year, up by a significant 5.7%. And investors are pouring money into U.S. equities at a record pace, actually. But at the
Well,
same time, like you said, there are worries about potential economic slowdowns, kind of looming on the horizon.
yeah, it's this disconnect between market sentiment and economic reality. It's certainly intriguing. Investors seem to be betting on a future where, well, strong corporate earnings
Yeah.
and maybe some favorable policy changes outweigh the risks. But the question is, are they? Are they being maybe overly optimistic?
Yeah, especially considering President-elect Trump's, well, his rather bold move, threatening 100% tariffs on the BRICS nations if they
No.
try to undermine the U.S. dollar. That's not just economic policy. That's geopolitical maneuvering. So could this spark a global trade war?
Well, that's a significant risk for sure. I mean, remember, the U.S. dollar is the world's reserve currency. It's crucial for international transactions and financial stability.
Yeah.
Any attempt to challenge its dominance
Yeah.
could have major consequences. And we also need to consider how the BRICS nations
Yeah.
might retaliate. Could they seek to maybe reduce their dependence on the dollar, perhaps
Oh.
by...
Promoting alternative reserve currencies or
Mhm.
by strengthening their own regional trade blocs, right? That raises a whole other level of complexity to this. So we've got potential trade wars on the horizon, a strong U.S. dollar, and markets are seemingly turning a blind eye to these economic warning signs.
Mhm.
How does the average person even begin to make sense of all this?
Right, and that's where understanding these financial trends becomes so important. I mean, for everyone. You don't
Yeah.
need to be a Wall Street guru to benefit from a bit of financial literacy. It's all about equipping yourself with the knowledge
To make
to make
so-
informed decisions.
Okay, so let's shift gears
Yeah.
for a moment and talk about something a little closer to home, Black Friday. The news is, it's buzzing about sales being up 3.4% year over year, especially in the e-commerce world.
Yeah.
So does this
Does
this burst of holiday spending suggest that maybe the economy might be stronger than some fear?
Well, it's tempting to view it as a sign of economic health.
Yeah.
But I'd caution against drawing too many conclusions from just a single data point, especially when other indicators are pointing to a potential slowdown. I mean, could it be that consumers are feeling the pinch elsewhere and cutting back in other areas just to afford their holiday shopping?
So you're saying this Black Friday boom might be, well, a bit of a sugar rush, masking some underlying economic weakness.
Precisely. And that's where the potential disconnect with the markets, well, it comes back into play. Our investors may be focusing too much on these positive headlines
Yeah.
and overlooking the possibility of a weakening consumer market down the road.
That's a great point. It's like getting excited about a shiny new car
Yeah.
without checking if you can actually afford the monthly payment.
Exactly. It's all about looking at the full picture
Yeah.
and weighing all the evidence,
Yeah.
not just getting caught up in the excitement of the moment.
Okay, now let's take a look. Across the pond to Europe, analysts at Bank of America, they're making a bold, a bold contrarian bet. They believe European stocks are
Yeah.
currently undervalued, even as they're headed for their worst underperformance compared to the U.S. since 1976. But here's the twist. J.P. Morgan is predicting that the European Central Bank will have to cut rates by 50 basis points because the Eurozone economy is so weak. So it seems like a mixed bag of signals.
Yeah, Europe is. It's a fascinating case study right now. What makes Bank of America's analysis interesting is that they're looking beyond its immediate economic gloom, right? And they're focused on the long-term potential.
Of European companies.
Yeah.
They argue that European valuations have become so depressed that there's now
Significant margin of safety
oh,
for investors who are willing to
it's
take.
contrarian approach.
So they're essentially saying that the negativity surrounding European assets has gone too far, creating an opportunity for those brave enough to go against the current. Exactly. And this is a perfect example of why understanding different perspectives is so crucial. We see this extreme disconnect
Mm.
between the bullishness on U.S. assets and the bearishness on the rest of the world. So the begs question, will this trend continue? Or is there a correction on the horizon?
It seems like every headline we explore just adds another layer to this financial puzzle.
And that's precisely what makes this so fascinating, isn't it? It's like
Yeah?
a real-life detective novel.
Yeah.
And we're piecing together clues to understand the bigger picture.
I love that. But before we get too lost in the macro trends, let's zoom in on a few intriguing details that really caught my eye. Things that might seem, well, small on the surface, but could actually reveal a lot about the underlying currents.
Absolutely. Let's start with the new 23-hour U.S. stock exchange, the 24 exchange. I know it might sound like a minor detail, but it actually signifies a move towards a truly global, always-on market, and this could have significant implications for investors and companies. I mean, think about it. No more waiting for the opening bell.
And what about this? A crypto art enthusiast ate a banana taped to a wall, which sold for $6.2 million. I can't help but wonder, does this signal a bubble in the art market, or is it just a sign of the times, where the lines between art and absurdity are increasingly blurred?
Well, it's a fascinating example of the speculative frenzy that can grip certain markets, especially those fueled by hype and the allure of new technologies. It raises questions about value, ownership, and the very definition of art in the digital age.
Yeah.
You know, I mean, after all, the banana's gone.
Yeah.
But the concept, the story, well, that's what endures.
Right, and finally, a story that hits a bit closer to home for many people. Volkswagen workers in Germany are planning walkouts. Now, while this might seem like a purely labor-related issue, it also speaks to the broader economic anxieties gripping the globe.
Indeed. We're seeing a confluence of factors at play here. Economic uncertainty, cost-cutting pressures on companies like Volkswagen, and workers demanding better wages and working conditions amidst rising inflation. So this situation could be like a microcosm of a larger labor unrest that might unfold as economies around the world navigate these turbulent times.
Well, we've covered a lot of ground already. It seems like every headline we unpack reveals another layer of this intricate financial web. But before we dive even deeper, let's just take a moment to reflect. What stands out to you most so far?
Well, I think what's truly fascinating is the interplay of these opposing forces at work. Economic uncertainty versus market optimism, the potential for trade wars versus the interconnectedness of the global economy, and these traditional industries grappling with disruption while these new markets emerge. It's a time of both risk and opportunity, and understanding these dynamics is crucial for navigating the road ahead.
Yeah, it really is amazing how all of these seemingly disparate events, they're all interconnected, huh? We've got these record inflows into U.S. equities, but then there's those potential slowdowns that you mentioned. It's making my head spin trying to connect the dots.
Yeah, I think it definitely highlights the complexities of the global financial system for sure. One thing that's driving this influx into U.S. markets, though, is this idea of, Tina, there is no alternative. With interest rates still, relatively low, investors are eager for returns, and they see stocks as the most attractive option, I guess, despite those inherent risks.
So it's like they're saying, yeah, sure, there might be some storm clouds on the horizon, but the U.S. stock market, well, it's still the best shelter we've got, right?
Yeah, that's one way to look at it. But as we've been talking about, there are those other factors to consider, too, like the potential for trade wars and those economic warning signs we can't ignore. It's a delicate balancing act.
And speaking of balancing acts, let's get back to President-elect Trump's tariff threats against the BRICS nations. This isn't just some casual economic policy tweak. It feels more like a major power play with potentially huge consequences.
Absolutely. And we already touched on the role of the U.S. dollar as that world reserve currency. So if those tariffs were to actually go into effect, it could very well motivate the BRICS nations to explore ways to, lessen their reliance on the dollar. Imagine a scenario where they decide to just bolster their own currencies or even create a new reserve currency altogether. Now, that would be a seismic shift in the global financial order.
Wow, that's a pretty intense scenario. It'd be like, rewriting the rules of the entire global economy. But before we spiral down that rabbit hole, I'd love to get your take on another intriguing development. China's 10-year bond yield just hit a record low, dipping below 2%. That seems significant, but to be honest, I'm not entirely sure what it all means. Could you break it down for me?
Sure. So bond yields are essentially the return an investor can expect to receive from holding a bond. When yields fall, it generally means that investors are seeking safer havens for their money, often because they're concerned about economic instability or slowing growth. And so in China's case, this record low yield is a reflection of their current economic slowdown, which is being driven in part by that ongoing property crisis and weaker consumer demand.
So it's kind of like a canary in the coal mine for the Chinese economy. Lower bond yields, they signal trouble ahead.
Yeah, you could say that. It's definitely a sign that investors are feeling pretty cautious about China's economic prospects. And remember, what happens in China, well, it rarely stays in China. Their economy is so deeply integrated into the global system that any significant slowdown there will inevitably have ripple effects around the world.
Right, okay, so let's recap where we are. We've got the U.S. market seemingly defying gravity, fueled by this whole Tina mentality. We've got the BRICS nations potentially maneuvering to challenge the dollar's dominance. And we've got China's economic engine sputtering, which is sending those ripples of uncertainty across the globe. It's a lot to take in. What are you personally keeping an eye on in these coming months? What developments are you most curious about?
I think for me, it's about watching how all of these various forces interact. Will President-elect Trump's protectionist policies trigger a full-blown trade war? Will the U.S. market's exuberance will continue, or will those economic realities eventually catch up? And then, of course, there's Europe. Will it prove to be that contrarian opportunity some analysts believe, or will it get bogged down by its economic woes? Those are the key questions on my mind.
And those are questions that could have a major impact on all of us, right? Not just those working in the financial sector. It's a good reminder that even when we're talking about those more abstract concepts like bond yields or currency markets, there are real-world consequences for people's lives and livelihoods.
Absolutely. And it really just reinforces the importance of understanding these trends and engaging in these conversations, even if you don't have a finance degree. Knowledge is power, especially when it comes to navigating these complexities of the modern world.
Well said. I feel like we've only just scratched the surface of this intricate web of financial news, and I'm really eager to delve even deeper. But for now, let's give our listeners a moment to digest all this information and really just ponder the implications. When we come back, we'll tackle that final part of our financial puzzle, exploring some more fascinating insights and some potential scenarios that might unfold in the coming months. Stay with us.
Okay, and we're back, ready to tackle the final piece of our financial puzzle. We've been exploring this tension between, market optimism and some
Pretty unsettling.
economic signals. It's like everyone's been invited to a party, but no one's sure if the music's about to stop.
Yeah, a very apt analogy. So as we head into this final stretch of our deep dive, I want to circle back to those contrarian Bank of America analysts.
Right, the ones betting on European stocks, even though,
Right.
well, a lot of investors are running for the hills. It's exactly. They're predicting that European stocks are on track for their worst performance relative to the U.S. since 1976. But they still see it as an opportunity. It does seem, counterintuitive, to say the least.
Yeah,
but that's the nature of contrarian investing, right? It's about looking for value, where others just see risk. And what makes Bank of America's analysis so compelling is their reasoning. We're not just saying buy low, sell high. They've identified several factors that suggest that European assets are oversold, creating that potential for a significant rebound.
So they're looking beyond, all those headlines about a weak Eurozone economy and those potential rate cuts, and focusing instead on
the long-term potential of
Yeah.
European companies. Exactly. They argue that European valuations, they've become so depressed, that there's this built-in margin of safety for investors. It's like finding a rare antique at a flea market, Everyone else is overlooking its value. But you see, its potential. Of course, it's not without risk. The Eurozone's economic challenges, they're real. And there's no guarantee of a quick turnaround. But for those with a longer-term perspective and a tolerance for risk, European stocks could present a pretty interesting opportunity.
It seems like every time we think we've got a handle on this financial landscape, another layer of complexity. Thank you, Burgess.
Right, and that's what makes it so engaging. We're constantly learning, adapting, and challenging our assumptions. Let's shift gears for a moment and revisit that story about the Volkswagen workers, line of those walkouts in Germany. It's a good reminder that all these economic trends have very real consequences for people's lives.
Yeah, it's easy to get caught up in the abstract world of markets and economic indicators, but ultimately it's about people's jobs, their livelihoods, their ability to provide.
For their family.
Exactly. And this particular situation, it highlights this growing tension between labor and capital that we're seeing play out on a global scale.
Yeah.
Companies are facing pressure to cut costs and remain competitive, while workers are demanding, well, better wages and better working conditions amidst rising inflation. So it's a bit like a balancing act. And finding solutions that work for everyone, well, that's a major challenge.
So we've covered a lot of ground today, from those soaring U.S. markets and potential trade wars to a slowing Chinese economy and labor unrest in Europe. As we wrap up, I'd love to hear your final thoughts. What's the key takeaway you want our listener to walk away with? What should they be paying attention to as we move forward? I think the biggest lesson here is the interconnectedness of everything. The financial markets, the economy, geopolitics, social trends, they're all intricately woven together. What happens in one corner of the world can have ripple effects across the globe. So the key is to stay informed, be adaptable, and never stop asking questions.
Beautifully said. It's like we've been piecing together this giant jigsaw puzzle, each headline a separate piece. That, when connected, reveals this complex and ever-changing picture of the world. But this picture, it's never truly complete. There are always new pieces to find, new connections to make.
Exactly. And that's what makes this journey so fascinating. We're all participants in this ongoing narrative, whether we realize it or not. So I encourage our listener to continue exploring these topics. Seek out diverse perspectives and never be afraid to challenge conventional wisdom. After all, the world of finance, like life itself, is full of surprises.
Well said. And on that note, we'll bring our deep dive to a close. We hope you've enjoyed exploring these financial headlines with us today. And remember, the conversation doesn't end here. We encourage you to continue your own exploration, seek out new information, and keep asking those thought-provoking questions. Until next time, happy exploring